everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what do we talk about? Well, for the methodology in action, I have a new mystery chart. I also have an old reveal. I don't have a whole lot of trades to report, so I'm going to hold off on that for a while. We did have one, as I believe I said last week, stop out at a loss, and we also had one that's not doing so hot. So I'm kind of biding my time a little bit with the trades, and that's just trend following. And I almost did today's show on patience, and I'll probably get around to doing that in upcoming shows. But patience is the secret to trading, one of the few secrets that are out there. It's not about the crypto. I'm going to continue my discussion on that, and I'll have a lot to say, and that's kind of inspired by a crypto Q&A. By the way, if you send me a request, I'll be happy to cover it. If I can't cover it here, I'll cover it in Thursday's webinar, which is a little bit more open-ended. And by the way, you can attend those live. If you go to davelandry.com/webinar, I would love to have you there. The more the merrier, and I think it makes for a much better show. In fact, some of this gentleman's question I'm going to finish up in the week in charts. If you would like the slides from this presentation and all the other presentations, which include a lot of the rules and systems and setups, and of course a ton on trading psychology, you can go to davelandry.com/StockCharts. I'll also give you quite a bit of stuff to keep you busy for a while. All three of my books in PDF format, limited access to the members area, market timing course, a bunch of other stuff. If you need to reach me, davelandry.com/contact, or you can find me on Twitter at @tfollowingmoron. And again, for the weekly webinars, go to davelandry.com/webinar. Probably won't be doing one next week because I will be traveling, but usually they're Thursdays at 6 o'clock Central Time. All right, let's talk about the mystery charts and the methodology in action. So here's one that I talked about a couple of weeks ago, or last week, and let's go ahead and reveal it. It's CYXT. Let's see what happened. Well, there's the parameters first. Entry of 3, stop at 215, IPT of 385. Pretty volatile stock, a little cheaper stock. It might be Chinese if memory serves. But anyway, nice little trend higher, nice fairly deep pullback. Entry here, protective stop down here, and then the IPT actually off the charts way up there. And you can see, bigger picture-wise, it was a cup and handle. I don't necessarily trade directly off of big picture patterns, although a cup and handle is close to a pattern I would trade. I trade rather off of my own patterns, such as TKOs, pullbacks, first thrust, bow ties, and things like that. But it's nice to have a bigger picture pattern backing what I'm doing. Now, you can see it did rally up, but it didn't quite trigger, thank goodness, and continue to pull back. And that's why we use entries to avoid, not all the time, but a lot of times, to avoid getting triggered in, sometimes on noise alone. So no capital was put into harm's way. As far as triggers are concerned, you can see I used a fairly liberal trigger in here just in case it bounced higher and then rolled back over, and thank goodness this is what happened. As I said quite a bit, sometimes people email me and say, hey, Dave, I'm down about 50% in that trade you recommended, and we'll go back and forth a little bit, and says, I would never recommend that stock. It's been going straight down as of late. And then I'll go and look way back in time after going back and forth a few times and realize that, yeah, it was 6 months earlier, and it never did trigger. So no trigger, no trade. Now, we have a new mystery chart this week, and you can see those are parameters. Entry 205, protective stop 140, IPT of 270. This is another very, very volatile stock. But you can see this thing blasted off the lows. It also has a bigger picture cup and handle look to it. And then it had a nice deep pullback. So entries here, stop is down here, and IPT, once again, is off the charts. Okay, I wanted to do an update on the TFM 10% system. We could get a buy signal as soon as Friday, and that's February 17th, 2023, not 2024. We might get a buy signal then too. All right, so let's take a look at this. As I've said quite a bit, the 10% line, which is in the ACP plugin, and all you have to do if you're watching this video on YouTube is like the video, and you'll get the plugin for free. Then you come down here and click on this little plugin right there, and absolutely free. And I keep saying I'm going to charge for it, but for now it's free. And it'll plot, or you can plot these lines. I need to see if I can share these templates with you if it's something you're interested in. But this is just simply 90% of the 50-week close, because we're using a weekly chart here. If you're using a daily chart, it would be of the 50-day chart. But for the system, it uses 90% of the 50-week closing high, which translates to 10% below that level. So my thinking, as I've said ad nauseum, is if a market is going to lose 50% of its value, half of its value, it's going to lose 10% of its value first. Now, 10% is a good round number for something like the S&P. For other markets, it might be much, much, much wider. Some of the wild and crazy stocks that I trade in crypto, for instance, 10%, that'll happen in a heartbeat. In fact, I actually use a 10% and 20% profit target on some of these cryptos, and I get hit sometimes the same day, sometimes the same hour, and I actually will show you one of those in a few minutes. But anyway, 10%, good round number for S&P 500, and the whole idea behind this system, and by the way, a sell is just simply a close below the 10% line, or as I often call it, the buy line, and that close also has to be below the 50-week moving average. The 50-week moving average is a little bit of a whipsaw filter. As a general statement, you probably could buy and sell above and below the buy line, but you probably would get in and out quite a bit and a little bit more than necessary. And by the way, with a whipsaw filter, you do have to be careful. You don't want to design too many whipsaw filters in, because when you start doing that, before you know it, you start curve fitting the system. In fact, since I've published a system, I've learned a few things. Like, for instance, right here, technically this was a buy signal, but I would never buy a market, and if this moving average wasn't so thick, you would see it. If you look way down here, you can see a little bit of green. That's one bar of Landry light. Actually, two bars in this case, bar one and bar two. But anyway, I would never buy or design a system that would buy on weakness. I only buy on strength, and that's one thing I overlooked, but it's been out there, the system that is, for, I guess, about 5 years now, so there's no need to rush out and change the system. So we'll just leave the original system as is, and we'll continue to follow up with it for hopefully a long, long time. Anyway, when I built the system, my designer's intent, so to speak, was to get you out of trouble. And luckily, when I back-tested it, initially I only back-tested about 10 years or so, but then I went back 30 years and eventually went back almost 100 years. And I discovered that there's no guarantee this will always happen, but so far it has gotten you out right before every major bear market in history. Doesn't mean that it will continue to do that, and it also doesn't mean that occasionally you won't get a little whipsaw. But as a general statement, it's a really good system for getting you out of harm's way. Now, one thing that I didn't really think about when I designed it is that to get you back in the market with a 50-week look-back period, it could take a while to get you long again. But it actually works out pretty good when you have a longer term kind of bear market like we've been in, and for 2022 and I guess early 2023, the buy line or the 10% line eventually catches up. But you could see here we were looking at this closing high, and then as each week passed, that line began to drop, and you can see this is it right here, which is now dropping down, and price has risen above it. So inadvertently, that helps to give it time to find its bottom. Now, if you have a V-shaped recovery like we did in the pandemic, a system like this will be a little late, but we do trade individual stocks, and we did get signals long before this system re-triggered. Now, I was explaining to my clients a few weeks back that this system only beats the stock market when you have bear markets in between. And that's kind of like the whole secret, is you don't want to lose, especially if you're nearing retirement, half of your retirement right before you retire. And it's easy to look at a longer term chart, and it's easy for these Kool-Aid salesmen who sell you on the buy and hold that, hey, look, this thing goes up longer term. But as I learned from Greg Morris, and as I say ad nauseum, a lot of their metrics are based on an 81-year time horizon. And as I often say, quoting Sweet Brown, ain't nobody got time for that. But anyway, the thing I want to show you to get back in, it's a little bit more stringent. You need 2 bars of Landry light, bar 1, bar 2, which we now have. And then it also has to close above the buy line. The Landry light will have it closing above the moving average, so it also has to close above the buy line. So at this point, any point above this green line, we are within 10% of the 50-week closing high in the S&P 500. So Landry light simply lows greater than the moving average. And this indicator, or as I like to call it, illustrated down here, you can plot this below the chart. It kind of helps to see what's going. It kind of helps to show you what's going on in the market. When it's mostly green, as I preach, you want to be long the market. And when it's mostly red, you want to be short, or at least out of the market. Okay, as I said earlier, I did get a question this week, and I'm going to go through about 2/3 of it, and then the rest of it I'll cover in the weekend charts. So lately, I've been talking a little bit about the 230 EMA breakout system. This was the first system that I ever published. It was published in 1996, I believe, in Stocks and Commodities magazine. And it was just a simple little system that I created to trade the Japanese yen. And the whole thinking was, or the designer's intent, so to speak, was to design something super simple to prove that trend following could work. And I'm not a huge fan of breakout systems, although this one is kind of cool. And I know you probably want to party with me, but it's kind of cool because you will avoid a lot of whipsaw by waiting for that Landry light to occur. And on top of that, waiting for a trigger. And I'll show you what that means in just one second. So continuing with this question, 230 EMA system, when you compare TRX USD, TRX USDT, and TRX BTC, all of the 230 EMA signals occurred at different times. Does this influence your opinion on the trades, or does it matter because they are all different pairs? I didn't read initially the second part of his question, but he sort of answered a little bit of his question himself. But let's just kind of pick that apart a little bit. First one's going to be TRX USD. So the 230 EMA system, and by the way, initially was called a 220 EMA breakout system, in case you Google it. And again, it was in Stocks Commodities. And over the years, I found myself liking the 30 EMA more and more. And that's why I'm using the 30 EMA with it. But you could use any moving average you want. I'm sort of using the same kind of system, so to speak, in the S&P 500 with a 50-week moving average. Anyway, bar 1, you have to kind of squint your eyes. But if you look down here, you can see the Landry light count is 1. And again, this just counts the number of bars. It doesn't count the magnitude, because right here, you have to really squint your eyes and maybe make the moving average a little bit thinner. But I like a big, thick moving average so I can see it. But anyway, this is still Landry light at this point in time. But notice how close it is to the moving average. And notice that this does not count magnitude. It just counts the number of bars. So it's been 35 bars since this first bar here, or since 0 right here. When it intersects, it goes back to 0, and then the count starts over. Now, by the way, if it's flipping back and forth, then there is no trend. But also look at the market to see that. So we had a little green back here. We had none, a little red, green. It just kind of flipped back and forth, back and forth, back and forth. In fact, right here would have been a 230 EMA breakout, but we use a little wiggle room above the high, and you can see it never did take out that high to begin with. So let's finish up here. Bar 1, bar 2, right here, you can definitely see the low is greater, or you can look down below and see that's bar 2 of Landry light. So when that occurs, you want to enter above the 2-bar high plus a little bit of wiggle room. Now, I've talked quite a bit about breakouts lately. Breakouts tend to work when you're in a breakout kind of market. And lately, for the most part, and I'm going to show you some shorts here in one second, but for the most part, crypto has been on fire. So these breakouts have been working really well. In fact, I actually missed the first run in a lot of these because I wasn't paying a lot of attention to crypto because it sort of died out for a while. But now it's beginning to wake up again, or has been waking up quite a bit. So if we zoom in on that, you can see bar 1, and by being zoomed in, you can see the low is definitely greater than the moving average. A gap, if you want to call it that, or as I call it, Landry light. Bar 2, and as you can see, the low also above the 30 EMA. So you want to enter above the 2-bar high plus a little bit of wiggle room to avoid being triggered in on noise alone. And again, breakouts are prone to failure and false signals. But what's kind of cool about this is a lot of times it sort of keeps self-correcting when you're in these choppy markets, and you don't get any bias signals or false entries when that occurs. Anyway, let's take a look at the UXDT, TRX USDT, and you can see it's the same exact signal there. Bar 1, greater than moving average. Bar 2, greater than moving average. You want to enter above those two highs plus a little bit of wiggle room. So those two gave the same exact signal in this particular case, and I would imagine most of the time they do. I kind of feel like you could interchange these two, and I'm not a pure mechanical trader anyway, so I think the charts will look close enough alike to where I wouldn't worry about splitting hairs in this particular case. So the TRX USD and the TRX USDT, or grab your favorite crypto pair, USD versus USDT, should be very, very similar. And technically, and I'm making little air quotes. I need to get back on the camera. But I'm making little air quotes. But technically, the USDT is pegged to the dollar. And I guess the dollar should be capitalized in this case. Therefore, trade what's available to you. I do a lot of my crypto trading in an offshore account simply because they just have a ton of crypto available. They almost have everything new that's available. I have a little website I go to, free website, and they have like a little scroll that goes across that shows you the strongest pairs. And I'll look at that a couple times a day, see what's moving. I'll also do relative strength sorts, which you could do in ACP, and then look to buy the highest pairs. So trade what's available to you. Although I have to say the USDT does scare the stuffing out of me. I read some articles about it a while back, and do your own due diligence there too. I'm in and out of these for a trade. What scares me is that USDT could eventually end badly. It's supposed to be backed by assets, but there's a lot of questions about that. And also the government is not a big fan of people calling something a dollar. I don't know. I guess they have a thing about it. They don't want people with their own dollars. They only want you with their dollars. Anyway, so looking at the TRX BTC, you could see that it's a different animal, okay? Only recently did we see a signal, and Hal sort of answered his own question on this. So bar 1, bar 2, enter above that 2-bar high plus a little wiggle room, so your buy would be right there. But the denominator on this obviously is completely different than the other two. The USD, USDT, kind of the same thing, and you could every now and then I'll flip back and forth between those depending on what I'm buying or selling because I need to convert that over, and usually it's a 1-for-1 and maybe just a small fraction of a share they scrape off for their VIG. So again, treat this as a different animal. I actually don't trade any pairs versus BTC. Maybe Ethereum BTC would be something that I do occasionally trade, but for the most part, I just look at the pair in and of itself versus the dollar, and that's the way to trade. A while back, if the pair didn't have a USDT or USD or what's the other one, USDC, and only went against Bitcoin and Ethereum or whatever, which I don't understand why that some don't have a dollar peg or whatever you call it, denominator. Anyway, I would actually trade those, but now there's so many of these coins out there or tokens that I usually can find something worthwhile trading without having the hassle. When you're trading something like anything with a BTC or ETH denominator, you have to first buy Bitcoin and then you have to flip it into what you're buying, as opposed to if it's just USD or USDT, if you already have that in your account, you just simply buy the pair. Hopefully that made sense. Okay, now, next question is, can you talk about price times volume and how it might influence which cryptos you are willing to trade? Normally, 500K volume is a requirement for the average volume / liquidity trade, but since many of these S coins are low in price, they seem very affordable to some in order to be able to buy millions of shares. And he gives the example of SHIB USD traded 3.18 billion shares on a bar ranging from 0.0001201 to 0.0001702 per share. And his point was that this is $43,000 to $63,000. And he says, and it would seem that one trader or a group of traders could easily come up with that amount of money to get the stock to run up. So I assume he means crypto. And I'll get to that part of his statement because there's something interesting there. The reason you want to be careful with trading something that's low in volume, let's talk about stocks for a second. So you buy a stock and it's kind of low in volume. Well, you might have one big trader that might have been sitting on it forever, and then he decides to dump his position on top of you. But something like SHIB, I wouldn't worry about it too much because I just pulled it up a little while ago. The average volume is 4.393 trillion shares. Now, I know it's a fraction of a penny for this thing, and everybody's dream is buying SHIB and have it go into a penny. That's not going to happen. But a lot of people are dreaming, and that's why a lot of people buy it. By the way, we're trading traders and not markets, and that's the great thing about these altcoins is that you've got a lot of wild, crazy, speculative money out there. And by the way, I think us traders, especially if you're willing to get educated on money management and market selection, of course, but money management especially, I think we have an unfair advantage because there's a lot of new people coming into the crypto and they wouldn't know how to trade if it, they wouldn't know how to trade if it hit them in the butt, I guess, is what I'm trying to say. But anyway, 4.93 trillion on average. I think it's a 10-day average volume. The other thing I occasionally do is you look at the spreads which are provided by most brokerages, and I just did a screen snapshot as it was flickering by, and I picked up one here. This is $24,000, so there's plenty of volume coming in. I'm sure there's plenty of volume up here too. But I wouldn't worry about liquidity on something like that because it looks like there's plenty of shares. Now, the first thing I do when I'm looking at crypto, and sometimes I just buy the ones that are going straight up, and I'll talk about that in a few minutes. But the first thing I do when I pull up the pairs is I look to see if there's a lot of tails, and these long tails suggest that the market is illiquid, so somebody gets filled really high and then the market just implodes and somebody gets filled really low. That's a clue that something's happening. And then if you see lots of narrow range bars where it really doesn't move a whole lot, maybe just a day or two without going anywhere. In fact, look right here. It's like a week or so of trading where it didn't do anything. So this one obviously is super, super, super illiquid. Looking at this name, I have to stop myself. I promise I won't make any jokes for this one. For art. For art. You know, if you lose money in this, well, you know, there's no hope for you buying something named that. Although they are, I have to say, a lot of these things are completely ludicrous in what they do. And they're worth trading simply because they're moving. Now, he went on to say he said earlier, it would seem that one trader or a group of traders could easily come up with that amount of money to get the stock, and I'm assuming he meant crypto, to run up. Well, yeah, but so what? Okay, so let's say that they come in and they start buying it. Okay, well, that's why we look at charts to see if there's some sort of buying coming into a market. And if there is, we want to be long. If we could detect that there is selling coming into the market, then we want to think about being short. So that's okay if the market is manipulated. Years ago, I worked with a trader who was well seasoned, and I would help him pick stocks and find stocks and run the databases and stuff like that. And in the process, I became a pretty good stock picker because the database would take about 45 minutes to spit out the scans. That was way back in the day when we had old clunky computers. And in the meantime, I would just sit there and look at charts, and I'd go through 1,000 or so charts. And that's how I learned how to read charts. That and showing him setups, and he would explain to me what he liked and what he didn't. And I also wanted to keep my job because it was a pretty sweet gig. I was getting paid to do what I would be doing for free at home. Now, recently I told a story about what exactly do you do, and that seems to be a universal question that friends and family eventually ask me. And as I said recently, I used to have a long, drawn-out answer, and now I just say I buy things that go up and I sell things that go down. And that's pretty much it. Now, I have pullbacks and setups and stuff like TKOs and bow ties and all that other good stuff. But when you boil it all down, I'm looking to buy stuff that's going up and looking to sell stuff that's going down. And if you get into a bubble like we are now in crypto, sometimes you could do just that. Now, as I said recently, since no one can predict the future, the secret sauce, so to speak, is taking partial profits just in case you're only partially right, and loosening stops to ride out longer term trends just in case you're right big. So what I'm talking about there is establishing free positions, so to speak, or free rolling as I now call it. So this is what I call a gem trade. I borrowed that term from Landry, and now that I'm taking these gym trades, I have to drag my butt to the gym. I had to join a gym so I could talk about the gym trades. But basically what I'm doing is I'm coming in right before I leave for the gym, and I'm seeing if there's anything crypto-wise going straight up for the most part, because right now the market is going straight up, the overall market that is in crypto. And sometimes you can just get in these things and flip them out fairly quickly. So you can see this morning, right before I left for the gym, I bought some of this, and I'm not betting the farm. Okay, these are small positions, but they can work out quite nicely. And that was my entry at 5 cents. I multiply that times 20%. Now in stocks, I'm using historical volatility and other things to create a stop point and initial profit target. For crypto, I just put an IPT in of 20% higher. And then this morning while I was at the gym, this thing hit. And if it drops back below 5 cents, I'm out the remainder. So the worst can happen is that I break even on this trade. And the best thing can happen is that I'm in this trade for a long time. So that's what I call free rolling. And that's the secret to trading. The secret is in the money management and decent stock picking and market picking, of course. Now, if you think crypto is crap, and it probably is, then short them. And as I just said, I buy things that go up and I sell things that go down. And last week, I think this was on Thursday, crypto market was beginning to implode, so I shorted a bunch of the crypto pairs. So there you have it. I'm not just a crypto nut on the upside. I'm not afraid to short them. Well, that's all my time for today. If you have any questions, you can reach me at davelandry.com/contact. Again, if you're looking for the slides and a bunch of other information, go to davelandry.com/StockCharts. I want to thank everybody for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.